Hey guys, happy Friday Eve. I hope everyone's doing well. My computer is catching up with me. Alright, I hope everybody's doing good today. It's Friday Eve and we're about to be to the weekend. Yay! Comment below if you're watching live, and if you have any questions throughout this, I would be more than happy to answer your questions. Just want to see everybody and see how things are going for you and your business. So today we were just going to take a couple minutes and discuss the difference between a profit and loss and a balance sheet. I know I've discussed pieces of this in previous lives. If you haven't seen them, please feel free to go to my page, Hooked Accounting Services LLC, and you can find all of my content and previous lives, and just gives you some different topics that we've covered so far. So let's just go ahead and jump in. So your basic financial statements that you'll get from your accountant are the profit and loss statement and the balance sheet. The difference between the two is the profit and loss will show you your income and expenses categorized out during a specific period of time. That could be a month, a quarter, a year. We can do comparative profit and loss, where it'll show you, for instance, 2021 to 2022. Since we're not all the way through the year, you could do the first 6 months of 2021 compared to the first 6 months of 2022. And then we also have the balance sheet. And the balance sheet is different from the profit and loss in that it shows where your business is currently at. So where your bank account is currently at as of that statement date. So let's say you get a balance sheet for June 30th. It'll show you your bank balance as of June 30th. It'll show you your loan balances as of that date. If you have money outstanding to the IRS for payroll taxes or state of Florida for sales tax, that's what the balance sheet shows you, is your current standing of your assets, liabilities, and where your business stands equity-wise. So we're going to go over to the P&L first. I've briefly gone into P&L before. The very top of it will show your revenue. So whatever income you have coming into the business that is revenue related. One thing I want to just mention real quick here is that when your accountants and bookkeepers, CPAs are working on your books, they're going to ask you, did you put any money into the business from your personal bank account? So let's say you have another job, or your husband has a job, your wife has a job, and you put money from that personal bank account into the business. We're going to want to make sure that we don't capture any of those funds in the revenue section of your profit and loss. Why? You've already been taxed on that money. When you got that W-2 payroll from your personal account, you were taxed on that. So we don't want to put it in your income section of your profit and loss for you to be taxed yet again. Okay, we'll put that in through distributions or loan to shareholder, showing that you're personally investing in your company. So the revenue section or the income section of the profit and loss is strictly the income you receive from your customers. Under there, you'll have cost of goods sold. So if you sell products, your supplies, labor that is specific towards making the products you're selling. If you have a lawn service, the fuel that you put into the mowers, the weed eaters, the blowers, that all goes into your cost of goods sold. And so that way you can compare by your gross profit how you're doing revenue-wise compared to your cost of goods sold. That's a direct relationship there, and that's your gross profit. So that's the very top of your profit and loss statement. The bottom half of your profit and loss statement is all of your operating expenses, right? The things that you can't necessarily do without. For instance, office supplies, you may need ink for your printer, paper to print letters to your clients or prospective clients, your rent if you have an office building, telephone expense. We all are using telephones now, so we should all have telephone expense. If you use a lot of internet, all these types of things will be in your operating, which is under your gross profit. So you have your income, your cost of goods sold, your operating expenses, and at the very bottom, if there's any other type of income or expenses. Other income would be you have a savings account under the business name and you receive interest income through there. They give you a certain percentage of interest on the money you're holding in the bank. That would be another income. If you have a business credit card and you get cash rewards, your cash rewards would be other income to the business. It doesn't necessarily tie into the income that you're receiving from the clients, but it is income under the business name. Other expenses, your depreciation would be another expense. Trying to think, if you are late on your sales tax and you have to pay interest or penalties, specifically penalties to the state of Florida, which hopefully none of us have to pay, right? We're all on top of that. You have your bookkeepers helping you keep on top of that. But any penalties would be another expense. So then your very bottom, your bottom line, that's your net income or your net profit or net loss. Okay, so that is essentially what you are making for that period of time with all of expenses and income considered. So that's your profit and loss. The balance sheet starts out with your cash or current, like your hands-on assets. So if you have cash that you're holding, actual bills of cash for paying a random supply or to pay for a meal or to pay for some type of supply, that's a petty cash account. Your bank accounts are also in this section, savings accounts. If you happen to have a money market or a trust account, those would be listed here. Under your cash and checks, or your cash accounts, then you're going to have your other current assets, which may be you loan somebody money, so you're waiting for that money to be repaid. Accounts receivable, if you're on an accrual basis, if you keep track of, I've provided these products or these services and I'm waiting for the clients to repay me, here, this is going to be your accounts receivable category. Under that, then you would have your fixed assets. So if you're a lawn company, your lawnmowers, your blowers, your trailers to move all of your equipment around, those would all be categorized or capitalized as a fixed asset, to where you can depreciate it over the life of the asset and take a little portion of the purchase price each year as a deduction. So that helps you over the years, and then we can show the depreciation. Next on the top portion of the balance sheet is you'll have any intangible assets. If you have goodwill because you purchased the company from someone else, if you have patents or trademarks, those are all things that you pay money for that are an asset to you and that you can amortize just like depreciation. You can take a portion of it each year to be deducted as an expense. Finally, in the top portion of the balance sheet is any type of deposits, like a rent deposit, a security deposit of any type would be listed there. The bottom half of the balance sheet is your liabilities and your equity. So the first liability would be accounts payable. Let's say you purchase a bunch of supplies. If you're a dentist and you purchase a bunch of dental supplies from your vendor, but you haven't yet paid them, that amount that you have outstanding to pay the dental supply company would be in your accounts payable. Then after that, you would have any type of payroll liabilities, taxes that you don't have to pay yet that they're accruing, sales tax liabilities, again, taxes that you're accruing, that you're collecting from your customers that you haven't remitted to the state yet. Any loans from shareholders, if you put money into the business and haven't gotten it back out on a return of investment yet, that would be listed under the liabilities section. SBA loans, a lot of people took SBA loans during the pandemic, so that would be listed there. Then as you make the payments, your loans will slowly decrease. And then finally at the bottom is your equity section. So that's your retained earnings, which is the amount that carries over each year after you've considered your net income, net loss, and your distributions and those types of things. That's your rollover amount. Distributions, any money that you put into the company or take out of the company, like you want to go spend $500 for a weekend with your family, you have the money in the business, you can afford it, you can take that $500 out. This is where we wash it through, is the distributions. If you want to pay for a big purchase for yourself, for your family, you can make that purchase through the business account. We'll just wash it out through distributions. And so that just keeps track of the money that you as the owner are taking to and from the business. Additional paid-in capital is any money that you've put in that the business is holding, and that way it can be there for a rainy day, anything like that. That goes in this section. If you have any stock in the business, if you're a corporation especially, that's listed in the equity section. So your assets at the top, your liabilities, and equity at the bottom, those two have to equal one another. So they're two sections and they should equal each other. But that's an accounting thing that we help you with. So you don't have to understand that, but it is important that you understand what a balance sheet is, what a profit and loss is, so that you can use it to your benefit as a business owner to make these essential business decisions so that you can grow and prosper and hopefully have a return on your investment. I had a couple people ask me, because some loan agents use different terminology. There are different names for the statements. It all depends if you're filing cash or accrual, and your tax return will tell you that, and also your industry. But if you're on a cash basis, the profit and loss is actually called the statement of cash receipts and disbursements, and the balance sheet is called the statement of assets, liabilities, and equity. If you're on accrual basis, the balance sheet is the balance sheet. There's no different name for that. But on a accrual for the profit and loss is called the statement of income and expenses. So those are just kind of a couple of things to keep in mind. So if we send you a statement, when you tell us that the bank's asking you for a profit and loss statement but it says something else, it probably just has to do with the way you're reporting your accounting method, and that's just something that we refer to as GAAP, which is how the United States requires us as accountants to report your information. So again, nothing you have to worry about. Just wanted to make sure that you were aware, so it's no surprise or confusion to you, especially when you're trying to get a loan. It's usually time sensitive. So I hope this information was helpful. I hope that when you get your financials back from your bookkeeper account the next time, you can take a look and have a little more of an understanding of what you're looking at. I know it can be a lot, but that's what we're here to help you with. If you do need help reviewing this information, or you said, I've never seen a profit and loss or a balance sheet for my business, and that's probably something that you should do, which it is, you can always reach out to me. You can comment below, message me on Facebook. I do have a business page, Hooked Accounting Services LLC, that has all of my contact information, email, phone number. So I look forward to hearing from you guys, even if you just have comments, or if you have something you want me to answer in a future live. Sure, go ahead and message or comment and let me know. I'd be happy to do that for you. And I just hope this was helpful. I hope you guys have a good weekend, and I will see you guys next week on a live. Have a great day.